Hello traders, Gary Wagner here. A little bit after 11 a.m. in Honolulu, 5 o'clock in New York City on Friday, finally, the 20th day of July, 2012, and this is the daily report for gold and silver, our weekend review. Moderate to slightly higher close on the precious metals market, specifically gold and silver. They're up. Platinum, palladium did close lower as we go into the close for this weekend. We have gold currently trading up approximately $2, trading at 1583, 1584 bid-ask spread with a low of 1572.50 and a high of 1588.40. Silver up about a nickel today, 27.43, 27.33 bid-ask spread, low 26.71 and high 27.56. Traders, to give us an indication of what we saw this week, which was we are higher on the day, lower on the week. We're looking at a 240-minute chart, Heikin-Ashi format. You can see the beginning of the week is the 16th, which was Monday 15th. This is Sunday right in here, the beginning of the week. And as you can see, prices at that point were hovering just around, call it 1590 to 1592 in that area. We did take one stab at 1600, uneventful stab, followed by a sizable correction in which we saw the market go from about 1595 to an intraday low of below 1570. And then you can see this kind of summer doldrum trading activity as the market moved sideways through the rest of the week. Another way to look at this non-committal, so to speak, is if we consider our support level here, which is roughly at the 1530 area. Our resistance is currently 16, call it 1640, and this defined range. And when we take a look at how long it's been in this range, this is the beginning of March. This is right after the correction. It takes us off of these recent 1640 highs in which this level of support, because you can see right in here, there's no doubt it was supportive of the price at this point, but at that point you can see the market meanders lower, finds very, very good support in the area of, call it 1530 to 1535. We had good technical data that also really gave us evidence that there should be some sort of support in this area. But now it is really right within the mid-range of even that tight trading range. Now, no doubt on the positive side, although these markets have been under pressure, we have seen them trading drastically lower. When we look at the bigger picture and when we consider really what we are trading from, and this is that 1803 high, the market comes down. Since that point, when we take a look at these series of lows, we have had a succession of higher lows. That to me is a statement that the market at least is attempting to find some sort of bottom. At the same time, when we look at that, we talked about, my daily subscribers are well aware of my belief that this area right in here, which is 15, call it 1582, it's a 38% retracement level, closes above that point to me, signal a continuation of the belief that we could be hitting a potential bottom. What's most important to me here as we look at this particular chart, of course, this is a longer term view. This is our daily chart. It is in Heikin-Ashi format. And the question remains, now that we have really looked at this lower support level, upper resistance level, we can say without a doubt that we are getting closer to the apex of that particular triangle compression correction. If that is the case, will we see a standard or classic type of correction, as Elliott Wave has pointed out, which would be a series of 5 legs? I've labeled this 1, 2, I'm labeling this 3. for it to fall into a textbook category, and by no means does gold ever trade in a textbook manner, we would get the possibility of one more, call it leg up, that would be 4, a 5th leg down, and then what Elliott Wave calls the thrust, and the way, of course, we characterize the thrust, simply put, is that it breaks above the resistance area created from the upper resistance triangle trend line. Traders, as we look at this chart, it is the continuous contract of the dollar index. There can really be no doubt. We saw it hit this top. This is back on the mid part of July, call it the 11th and 12th, right in here when it approached 84. At that point, of course, it traded lower. You can see there were peaks and valleys within that. But ever since hitting this low of about just below 83, 82.80, we have had a steady rise in the dollar. Currently, it looks like it's closed at 83.60. We are looking at a daily chart. This is continuous contract COMEX silver. Have a Fibonacci retracement sequence. The retracement sequence, of course, begins in September of 2010. Markets trading roughly at $18, all the way up to that $50 high that we saw within silver. Reason for taking a look at that is it's also quite apparent. When we look at silver, there can be no doubt. We've got really strong support at $26 per ounce. Just like in gold, we have this triple bottom. We've identified that over the last couple of months. There's no doubt there. The one key difference that I am noticing when I look at this market, though, is that unlike gold that has had a series of higher lows, we're not really seeing that as much in silver. Although a case can be made that as we take a look at this really recent activity, this of course end of June to July, there is a series of higher lows just off of this support line at, call it, $26 per ounce. But in terms of the range itself, we have real strong resistance, of course, at 30.60, but we also have resistance right in here just above 28 at about 28.50 to 29, somewhere right in that area, because I'm going to base it off these series of tops here, these highs here, as well as these highs here. And that's what's really going to be giving us our resistance. My recommendation, of course, is going to be to currently maintain the long positions that we have. We have them slightly below where the market is trading, and maintain our current stops. This has been Gary Wagner, wishing you, as always, good trading. Have a great weekend. We'll talk to you on Monday for another daily update and review. Bye-bye.